In the last 12 months, AMD stock gained 320%. Nvidia, the most talked about AI stock on Earth, gained 15%. The S&P 500 gained 8%. Most investors spent the last year watching Nvidia and completely missed the fact that AMD was the best performing major semiconductor stock in the world. Today I'm going to tell you the full story, why it happened, whether it continues, and what you need to know right now. Let me start with the basics, because millions of retail investors who are suddenly interested in AMD do not actually know what the company does. AMD makes semiconductors, chips, across 4 business segments. Data center is the most important right now. That includes EPYC server processors that power cloud computing, and Instinct AI accelerators that compete directly with Nvidia. Client covers Ryzen chips for laptops and PCs. Gaming covers GPUs for consumers and the chips inside Xbox and PlayStation. And embedded covers industrial and automotive applications. Data center is the story. Everything else is secondary. Now the earnings report that triggered the 19% single session surge we covered in our previous videos. AMD reported Q1 2026 revenue of $7.44 billion, beating the $7.03 billion estimate. EPS of $1.37, beating the $1.30 expectation. But the number that made every investor stop was data center revenue. $3.7 billion, up 57% year over year. Overall revenue grew 38%, and then Q2 guidance came in at $11.2 billion, nearly 50% above Q1. That forward guidance is what moved the stock 19% in one session. On the earnings call, AMD CEO Lisa Su used a term that most retail investors had never heard before: Agentic AI. Let me explain exactly what it means. Regular AI is simple. You ask a question, it gives you an answer. One interaction. Agentic AI is fundamentally different. An AI agent is given a task, say, research a market and produce a report. It then plans its own steps. It searches the web, it pulls data, it runs code, it formats the output. It does all of this autonomously, looping through dozens of steps without human input at each one. The critical thing for AMD investors, every single one of those tool calls runs on a CPU, not a GPU. Agentic AI dramatically increases CPU demand. AMD makes the best server CPUs on the market. That is the connection that sent the stock up 19%. Here is something that almost no financial media has explained clearly. In an AI workflow, there are 2 distinct types of processing happening simultaneously. GPUs run the AI model itself, generating text, processing images, running inference. CPUs execute the tool calls, searching the web, pulling APIs, running code, managing memory. Agentic AI creates a continuous back-and-forth loop between GPU and CPU that dramatically increases demand for both. AMD makes EPYC server CPUs that dominate the server market. AMD also makes Instinct AI GPUs that compete with Nvidia. In an agentic AI world, AMD wins on both sides of every workflow. That is why Lisa Su raised the long-term data center revenue outlook to over 60% annual growth for the next 3 to 5 years. One detail from AMD's recent results that Wall Street has been paying close attention to: a 6 gigawatt GPU deployment deal with Meta. To put that scale in context, 6 gigawatts is enough electricity to power a city of 4 to 5 million people. This is the infrastructure Meta is building using AMD chips. Goldman Sachs called this deal out specifically as one of the major revenue drivers for AMD going forward. Goldman's models show AMD GPU units growing 66% in 2026 and nearly doubling again in 2027. A 6 gigawatt commitment from one of the largest AI spenders on Earth is not a rumor. It is a signed deployment that shows AMD has broken through Nvidia's dominance with at least one hyperscaler at massive scale. Let me show you exactly where AMD sits in the competitive landscape. In the GPU market, Nvidia dominates with 73, 0.21% market share. AMD holds 18.6%, more than double Intel's position. And Intel's GPU share collapsed from 8.22% in March to just 3.7% in April. In the server CPU market, AMD's EPYC processors have been taking market share from Intel consistently for the past 3 years. Intel's share is declining, AMD's is growing. In the two markets that matter most for AI infrastructure, AI GPUs and server CPUs, AMD is the only company gaining ground on the market leader. Now the comparison every investor is asking about, AMD versus Nvidia. Here's the honest picture. AMD gained 320% in 12 months. Nvidia gained 15%. AMD is growing revenue at 38%. Nvidia, when it reports May 20th, is expected to show revenue growth above 100%. AMD trades at 42.4 times forward earnings. Nvidia trades at 21 times. AMD has 18.6% AI GPU market share. Nvidia has 73%. AMD's software platform, ROCm, is developing but lags behind Nvidia's CUDA, which has a decade of developer adoption. The conclusion, AMD is the better stock performer over the last year. Nvidia is the better business by most fundamental measures. They are not the same bet. Nvidia's biggest competitive advantage over AMD is not the chip itself. It is the software. CUDA, Nvidia's programming platform, has been the standard for AI development for over a decade. Every major AI model in existence was trained on CUDA. Every AI developer knows CUDA. The entire ecosystem of libraries, tools, and frameworks is built around CUDA. AMD's equivalent platform is called ROCm. It is open source, it is improving rapidly, but it has a fraction of CUDA's adoption. Closing this software gap is AMD's biggest strategic challenge and its biggest opportunity. If ROCm achieves even 30% of CUDA's developer adoption, AMD's GPU market share could double within 3 years. Goldman Sachs recently reset their AMD price target upward with a clear thesis. Goldman's models show AMD GPU units growing 66% in 2026 and nearly doubling again in 2027. Critically, Goldman's EPS estimates for AMD in 2027 and 2028 are roughly 20% above Wall Street's consensus. That gap between Goldman's estimates and the street is significant. When a top firm believes earnings will come in 20% higher than consensus, they are saying the stock is more undervalued than it appears. Goldman still prefers Nvidia and Broadcom as their top semiconductor picks, but they called AMD a compelling entry point specifically for investors who want agentic AI exposure through a stock that has not fully priced it in yet. Let me read you exactly what Lisa Su said on the earnings call, because this is the statement that underpins every bullish AMD thesis right now. She said AMD is well positioned to grow data center segment revenue by more than 60% annually over the next 3 to 5 years, and scale its AI business to tens of billions in annual revenue in 2027. That is a CEO committing publicly on an earnings call to 60% annual data center growth for up to 5 consecutive years. Goldman Sachs built their price target around a 30 times PE multiple applied to a normalized EPS estimate of $15, which gives the $450 price target. In a bull scenario, Goldman sees the stock reaching $594. But here's the insight that almost nobody in financial media is talking about, and it completely changes how you should think about AMD versus Nvidia as a long-term investment. Everyone is watching the GPU race, Nvidia versus AMD. But AMD is quietly winning a different race that is about to become equally important, the server CPU race. AMD's EPYC processors have been taking market share from Intel in data center CPUs for 3 consecutive years. Intel, which used to own this market, is struggling to compete. And then Agentic AI arrived. Every Agentic AI workflow runs tool calls on CPUs. Lisa Su said server CPU demand is growing strong double digits and supply cannot keep up. AMD is the market share gainer in the exact processor category that Agentic AI just made critically important. The GPU story gets all the headlines. The CPU story is where AMD's most durable competitive advantage actually lives. Here's the current analyst picture on AMD. 34 analysts cover the stock. 41% say strong buy. 41% say buy. 18% say hold. 0 analysts recommend selling. 82% of professional analysts covering AMD recommend buying it right now. The average price target is $389. Goldman's bull case puts it at $594. The analyst consensus on AMD is one of the most uniformly bullish of any major semiconductor stock, more bullish even than Nvidia's consensus. Now the risk, and I want to be very direct about this because it is real. AMD trades at 42.4 times forward earnings. Nvidia trades at 21 times. The S&P 500 average is 21 times. AMD's own 5-year average PE is 30 times. Right now, AMD is trading at nearly double its historical average multiple and double Nvidia's multiple, even though Nvidia is growing revenue much faster. At 42 times forward earnings, AMD has no room for error. Any guidance miss, any slowdown in AI spending, any execution stumble in the meta GPU deployment, and the multiple compresses sharply. A reversion from 42 times to 30 times. Forward earnings alone would be a roughly 30% drawdown, even with no change in the underlying business. Know this risk before you size a position. Beyond valuation, there are 3 more risks. AMD bulls are underweighting. Risk 1, the CUDA software moat. Even with better hardware, developers choose Nvidia because they know CUDA. Switching costs are enormous. Risk 2, the meta GPU deployment. Goldman specifically flagged that any hiccups in the meta 6 gigawatt deployment is a key downside risk for AMD. If that deal encounters technical problems or delays, AMD's GPU revenue guidance is at risk. Risk 3, ARM-based chips. Apple Silicon demonstrated that ARM architecture can outperform traditional x86 chips dramatically. If enterprise computing shifts toward ARM, which companies like Amazon and Microsoft are already exploring for their own data center chips, AMD's x86 advantage could erode over the long term. Let me show you the full AMD story in one chart because understanding where this stock came from tells you a lot about where it might go. In 2019, AMD was trading at $30 with analysts questioning whether it could survive against Intel and Nvidia. Then the EPYC server CPU launched and began taking Intel's market share. The stock climbed to $160 by 2021. Then the crypto crash of 2022 collapsed GPU demand and the stock fell to $54, a 66% crash from peak. Then AI began. The data center narrative rebuilt the thesis from the ground up. And now, in 2026, and with Agentic AI accelerating CPU demand and the Meta deal confirmed, the stock has gained 66% year-to-date alone. This is not a one-event stock. It is a company that has been quietly rebuilding a competitive position for a decade. AMD's earnings beat did not just move AMD. It moved the entire semiconductor ecosystem simultaneously. Nvidia, which had not even reported yet, rose 5.5% on AMD's numbers because investors read AMD's AI demand signals as a preview of what Nvidia would report. Intel gained 4%. The VanEck Semiconductor ETF jumped 5%. Supermicro, which builds the servers that hold AI chips, surged 24.5%. And in the same week, Micron gained 33% and ARM Holdings gained 22%. A single AMD earnings report moved hundreds of billions in market value across dozens of companies. That is how central AMD has become to the AI infrastructure narrative. Nvidia reports May 20th, 7 days away. And AMD's result is the strongest leading indicator available for what Nvidia will report. If AMD grew data center revenue 57% while being the smaller player And if AI demand is truly supply constrained, as every CEO said this earnings season, then Nvidia's data center revenue, growing over 100% year over year, is entirely plausible. The AMD result did not just tell you about AMD. It told you that the entire AI chip ecosystem is seeing demand that exceeds supply. For Nvidia investors, AMD's beat was a preview of what is coming on May 20th. Watch them together. What should you actually do with AMD right now? 3 investor profiles. If you already own AMD, the thesis is intact. Lisa Su's 60% annual data center growth guidance, the Meta deal, and the Agentic AI CPU story are all confirmed. Monitor the valuation and watch the Meta deployment for any signs of trouble. If you are considering buying now, understand that 42 times forward earnings means any disappointment creates a significant drawdown. Size your position accordingly and wait for Nvidia's May 20th report to further confirm AI demand. If you feel like you missed the move, do not chase a 320% run at 42 times earnings. The most disciplined approach is to wait for either a sector-wide correction or a guidance-driven pullback to build a position at a more reasonable multiple. Is it too late to buy AMD? Here is the honest 3-scenario answer. Bull case. Lisa Su's 60% annual data center growth guidance proves accurate. The Meta deployment executes cleanly. ROCM adoption accelerates. And EPS reaches $15 by 2028. Goldman's price target of $450 to $594 represents 2 to 3.5 times current value. Base case. Data center grows 40%. Some valuation compression brings the multiple to 30 times, and the stock is flat to up 30% over 2 years. Bear case, AI spending slows broadly, the Meta deployment hits problems, the multiple compresses to 25 times, and the stock falls 30 to 40% from current levels. Which scenario you believe determines the answer to the question? If you own or are watching AMD, here are the 5 signals to track. Signal 1, Nvidia earnings May 20th. If Nvidia confirms enormous AI demand, AMD's thesis strengthens. Signal 2, any updates on the Meta 6 gigawatt GPU deployment. This is the largest single customer commitment AMD has publicly acknowledged. Signal 3, ROCM developer adoption metrics. Watch for any major AI framework switching from CUDA to ROCM. That is a structural shift. Signal 4, AMD's quarterly data center revenue must stay above 50% growth to justify a 42 times multiple. Any deceleration below 40% would be a valuation warning. Signal 5, ARM chip enterprise adoption. If Microsoft and Amazon accelerate their own ARM-based data center chips, that is a long-term headwind for AMD's x86 server dominance. There is one factor that does not appear in any valuation model, but that every long-term AMD investor should understand. When Lisa Su became CEO of AMD in 2014, the stock was trading at $4. Today, it is approximately $170, a 4,150% return under her leadership. She made the bet on EPYC server CPUs when Intel dominated the market. She acquired Xilinx to enter the FPGA market. She pivoted the company to data center before AI was the mainstream investment narrative. And now she is positioning AMD specifically for Agentic AI CPU demand before most analysts even understand what Agentic AI is. The quality of management at AMD is one of the most underappreciated factors in the investment thesis. Drop a comment. What is your AMD position right now? Do you already own it and are holding? Are you considering buying now? Did you miss the move and are waiting for a pullback? Or do you prefer Nvidia over AMD for AI chip exposure? I read every comment, and the answer genuinely shapes what I cover next. I am Marcus. AMD is up 320%. The Agentic AI CPU story is just beginning. The Meta deal is real. Goldman is bullish. And Nvidia reports in 7 days, and which will either confirm or complicate everything we covered today. Subscribe and hit the notification bell. That Nvidia breakdown on May 20th is going to be one of the most important videos in this entire series. I will see you there.